it's Quant Trade Edge, and today I wanted to do a little more of a deep dive into U-turns and also just some basic analysis, more so to just demonstrate the type of mindset you should take with the markets. So, the last video was about U-turns. I think that was Thursday or Wednesday. Friday was another day where it was options expiration. So things were trending down, and interestingly, someone in a chat group that I'm in mentioned that the last 2 hours of Friday has a positive expectation. Things tend to go up. So we're looking for a U-turn at around that time to catch the move up. So if we start with the beginning, so this was the big gap down we had in the S&P, and this is a 1 minute chart. Options expiration, I wouldn't expect to find a lot of rhyme or reason in the morning. There is a negative bias in the morning, but let's just look at the structure, because that's what we have. And from this gap down, we have one wave up. I'm sorry, one wave down, one wave up, one wave down, and actually from here, one wave up, higher low, one wave up. So this is an ABC up. And also I got some questions last time where people were looking at ABCs in both directions. ABCs only go against the trend. So on a day like this, and maybe you could throw in a 20 period moving average or something to just give you a sense of the trend is down. We gapped down, and we're heading a lot lower. So ABCs are corrective waves. It comes from Elliott wave, where you have 5 waves in the direction of the trend, and the little three-legged, or I guess they're two-legged. I guess if you count this down like ABC, these trends are counter-trend moves. So again here, this was an ABC. We didn't take out that high. Coming down here now, these are equal lows. So if you counted it this way, then this was a U-turn. If you started from here, then it would have been an ABC. So again, this U-turn would have failed because it went and made a new low. The last video we looked at, there were no failures on the day, and that's not realistic, especially on such a small time frame. So here, this whole thing is a hoagie. So here's your ABC U-turn, and this does get taken out, but something really interesting happens. Not a single bar can close above it. Tails above it, below, tails above it, tails above it, tails above it, closes below. So if you were using a buy stop, that would have triggered you in. If you were waiting for one bar to close above, that would have perhaps saved you from entering a U-turn over here. And then we continued lower into the afternoon, and again here, $91.91, so same lows. So this is kind of making me think that we should start from the latest. These are nuances that nobody writes about that detail of a nuance. It's just something you have to observe. But here, if we were to go from that low, then this is an ABC that wasn't taken out. If we went from this low, then yeah, it would have tailed above it. Again here, this is a new low on the day, and this is kind of an ABC. This is a higher low, and there is a little wave in here, but that wave doesn't really affect the major count. So again, there's a level that it doesn't get taken out. And remember, if you're trending down, each of these ABCs is a short setup. And you would typically shoot for new lows, or you could even try to go for a 1.272, like here. This ABC up, the 1.272 got you right here. This ABC up the 1.272 got you right here. This ABC up would have gotten you more. The 1.618 down there. In fact, maybe that's the sign of a climax. Again, these are all nuances that you're welcome to study to death. They're just interesting to see, like here. You don't quite get to the 1.272. Here, you get to the 1.61. Okay, so maybe there's nothing to be seen there. But then I'm also using, bigger picture. I'm hearing that the 2 to 4 p.m. Eastern, so that's 1 to 3 p.m. Central on a Friday, has an upward bias. So right here, this is 12:58 Central. And something interesting happens here. In addition to a decent volume bar there, we get 4 up bars in a row that takes out the previous high. So again, this is the other type of U-turn where the first swing up was bigger than the previous swing down. We pull back and then we took out that high. So this is your actual U-turn right here. And then it does this thing that I call the gut check. And that gut check is basically going in and making a higher low. It's significantly higher than here, so if you use that low as a stop, you didn't get stopped. And then all of a sudden, we have a decent rally to the upside. So if we look up here, oh, that's the next day. Okay, so 3 o'clock, ends up here, and that is a significant move, from the actual U-turn point of 5887, call it, we got to 5901. So it's about 15 points to the upside on that U-turn. So again, I just heard this. I'd never heard of this before, that 1 to 3 p.m. Central on Fridays have a positive bias. If anything, I was thinking this is a trend day, it might get uglier, but I did see this U-turn in the gut check, and was able to catch a small piece of this. But that led to my weekend fun, because I enjoy this stuff. And it's very simple. I just did a very simple test. I got 2-hour bars from 1 p.m. to 3 p.m. every Friday since 1998. And I did SPY, so I don't have to worry about rollover issues. And I just took the close minus the open. So assuming we blindly bought it at 1 p.m. Central and sold it at 3 p.m. And these are the points that accumulate on the SPY. And then I have a cumulative column here. So this, the first chart is actually this. So it actually seems to have no bias for quite a while, then a slight positive bias and kind of no bias for quite a while. But then from here, which is roughly late 2020, I've got the dates on the next charts I'll show you, it has a pretty significant upward bias. And then the second thing I did was say, you know what, OpEx is a significant difference to a Friday. And I just marked all of the OpEx, all the OpExes, so I could take them out. And when you look at only OpEx, this is what happens in the last 2 hours of the day. So only OpEx, monthly OpEx, doesn't really have an edge. So then that makes you say, okay, well, let's then look at just the Fridays without OpEx. And it's slightly better. And again, this date here where it really started working is February of 2020. And, arguably, this over here was 2008. And I've seen other friends with systems that all of a sudden a system that used to work both long and short stopped working on the short side after the 2008 bailouts. And so maybe there's something like that here that's related to it. And then, starting with the big bailouts in 2020, again, this upward bias. But, again, we're less interested in why it's there. We just like that it's there. And then the other comment that I heard was that especially if it's down on the day, it'll get a bigger bounce back. And the way to just look at that is I pulled up the data for the first half of the day, and I have, the net amount it is down over that time, and I just scatter plotted it with the individual outcomes of the last 2 hours of the day. And you can see here, if the first part of the day is down significantly, there's a few points up here that indicate you get more out of that OPEX. It's really not enough to be significant, though. This here is relatively tight. This is pretty loose on both sides, a little looser here, but that's really not enough for me to say, that there's any statistical significance. But again, this is very rudimentary. The whole thing took me like 30 minutes, and there's lots of ways to improve it. But to me, what this just says is on the last 2 hours of a Friday, that is an OPEX, which last Friday was an OPEX. But on the last 2 hours of the day, it doesn't hurt if you can find a U-turn like this and ride a few points into the close. So anyway, this is just more U-turn work, which is just basic market structure. And hope you're enjoying that. If you like this type of trading and analysis, join our Discord. I'll put a fresh link in the description.